Hi, welcome to this video today, which is on the 15th of February. We are on Saturday. We're just going to be looking at a couple of Forex pairs today, both with the euro in them. They're going to be Euro USD, Euro JPY. We will go take a look at the charts in a moment. In recent videos, we've been saying we felt the euro was about to break down hard against both the USD and the JPY. And it's now done that. We're up over 350 pips in each pair. However, I think there's far more profit potential to come. The euro should now go into a long and sustained downtrend. Any bounces, in our view, will be selling opportunities. I'm obviously going to give my updated views on the euro and the key levels to watch, but I also want to just go through some tips in terms of trend trading big trends. And this is from the point of view of both getting into a big trend in motion, and when you're in a big trend, how to manage your stop loss correctly so you can stay with the big trend but still have good risk control, not give back too much profit if the trend turns. Now, in terms of all these points, we are going to go and discuss them in more detail and take a look at the trade setups. But just before we do so, please just keep in mind that it's my view as of this moment in time. It can, of course, change in line with market conditions and action. If you want all of our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including the two we're going to look at right now, including our exact entry stops and targets, you can get live access to our member center on the link just beneath this video. Right, in terms of the pairs, let's take a look at them. And in terms of the first one we're going to do, it's going to be Euro USD. Euro USD, it's the monthly chart. Just very quickly before we go to the daily chart, just to see the big picture, the big levels. You can also see my target on this chart, which you can't see on the daily. Now, in terms of the euro, nice move up there. We peak out in 2018 and then work our way lower. And we rally here back to the 20-month moving average. If we're really bearish of a currency pair, we test the 20-day moving average, or not 20-day, 20-month moving average, we'll be looking for it to hold. It gets up, and of course, we fall away, and it's quite a nice red candle so far this month. So the rally for us over, and we've not only held the resistance at the 20-month moving average, we've now broken a key level, which is there. Those two bodies, they're on a round number 109. So the downtrend 109 holds, then we push off. Now we've broken through the 109 level. Rallies back to 109. I think it's going to be very hard for the euro to get above or hold above the level. Now, where are we going to go on the downside? Well, there, which is down towards the 104 level. Two candle tails there. Why have I picked them out? Well, Eurozone and the euro in far worse shape now than the euro was back here, which I'll discuss in a moment. But this level, I think, could get overrun, go down to the par level. So plenty of downside potential. We think this is now an established downtrend. Right, let's go over to the daily chart and look at the key technical levels to look out for if you're already in the trade, or of course if you want to get in on the trade. Right, Euro USD daily chart. All right, Euro USD daily chart, we can see it's nice fall to the downside. Now, if you're looking at trading big trends from the perspective of getting into them or holding them, you need to know the fundamentals and sentiment behind the chart. And I've written up some points on the fundamentals and sentiment which point to the euro going lower. With bounces, obviously. I think a bounce is probably due, but the bounce just be a correction of oversold and selling opportunity. Let's go through these points very quickly. We saw last week German GDP for Q4 down to 0 from 0.2% previous, so the economy's nearly in contraction. It'll be in contraction by the time the next figures come out. Zone also going south, drop in GDP from 1.2% to 0.9%. The slump in China is having a really big impact. The zone does a lot of business with China. The coronavirus recently has really hurt China. It was slowing up anyway. It's making the slow up even more severe. Germany is the powerhouse of the zone. If Germany is going down, it'll take the whole zone with it. Okay. It'll get worse before it gets better, in our view. Trump is threatening tariffs. That hasn't come yet, but I think it's going to come shortly. That will guarantee a recession in the zone. Can the zone recover? Um, so a lot of economists argue that, unemployment came down a little bit recently. So more people in jobs, wage growth should increase, more competition for jobs, and that then should stimulate the economy. It's a flawed argument because Eurozone, yeah, sure, unemployment came down a little bit, but still double what it is in the US. And in the US, you have not seen significant wage growth. Eurozone won't either. Eurozone's way behind the US in terms of getting people into jobs. Then you've got the central bank with negative rates and stimulus. Well, that's really negative for the currency and it won't help the economy. I said this before, they tried it for many years. It didn't work. They stopped it for a brief period of time. Now they brought it back. Why is it going to work this time round? It won't. I said it in terms of the last ECB meeting that they're clueless because they're saying they're going to take a whole year to review their strategy. A whole year. So will be deeply in recession in a year's time. USD 0.7. That will benefit if we move the risk off. We're in risk on at the moment, and the euro's falling. Risk off will hurt the euro even more. Now, in terms of the way that we've been playing this trade, we sold it back through 111.80. We didn't think it would take out the 112 level. We've held the position for a while. Comes through 20-day moving average. Tried to get back through it. Fail. Down. Come back to test it. Then down. That's a severe fall. I think we are due a retracement, but that retracement will be, a selling opportunity. If I just draw a trajectory, see the slope of that trajectory, then obviously we can see this one is much more severe. So if I do that, I then think we could rally back to 109, which is monthly resistance. Okay, so I need to get my line straight. I'm having difficulty doing. There we go. So that double trend line, a round number, monthly resistance, you could get a bit above it, but I don't think you're going to run away from it. Okay, now in terms of in the member center, I've got a stop back behind 110, behind the 20-day moving average. But yeah, as price comes up, this 20-day moving average will snake down. I think we can bring the stop a little bit closer, basically to there. So 109.80 effectively. Keep in mind, as price goes up, this average will come down. Okay, so you'll have the average, this second line, or second trend line resistance to hold a rally, of course, if it does get to the level. And I think if you're tracking big trends, you always want to leave one big round number in between your position and your stop. So here we're down near enough at 108. It's going to have to clear the next round number up, 109, and get significantly past it to take my stop. Okay, so you never put your stop too close. So with a round number in between, it would depend on the volatility of the pair, but I always have, normally if I'm trend following, a stop of 150, 200 pips. Of course, if you get a nice profit like this, you can always take half in and then look to sell half. Again, we'll put half back in if you bounce up towards the 109 level. Now, in terms of you doing this as a fresh trade, yeah, sure, you could wait for the bounce, but if you're bearish, I say this frequently, just drop a small trade in case she does run onto the downside, and then put another trade in on a rally. And you've got to keep in mind, although this is quite a steep fall, we have had historical low volatility in this pair. So yeah, we could just run onto the downside. So if you're bearish in with a small trade, sell the bounce. If you're already in it, you can take half off and also sell the bounce. Big fundamentals sentiment point to lower prices. And yeah, they drive big trends. So yeah, I think a rally looks likely. but that rally is going to be a selling opportunity. Long way to go on the downside. Right, let's go over now and look at Euro JPY. Right, Euro JPY monthly chart just very quickly. Now here we have a nice rally in the euro. Basically we top out, you get battle around the 20-month moving average, then a nice move to the downside, and then we come back up towards the 20-month moving average. And we're coming up here, we felt these two candles over here would be significant. So those two candles there, we do test the level just below the 20-month moving average, and now we're moving away. Double trend line resistance would be very hard to take out in our view. Where are we going on the downside? I do not see these candles here providing support. The big fundamentals point to the euro going down to 110. The yen is just so deeply oversold. And also, what I would say is if we get risk off, that will really help the yen, and that's a possibility. So we'll help it get to 110. Yeah, things get really ugly in financial markets. The yen's going to do well everywhere. We could push the euro down to the 100 level or even chart lows. But if we get to first target, we'll be very happy. Right, let's shift over and take a look at the daily chart. Right, on Euro JPY, daily chart draws some levels in a moment. Let's have a look at the fundamentals and sentiment. Now, list out 7 points in relation to the yen, which are all bullish, okay? Point number one, JPY oversold historically. It is. It's going to play catch up. It's going to go up on all major currencies longer term, in our view. Central bank does have negative rates in place and stimulus, just like Eurozone, but it's at its limit. It's probably going to be coming down from current levels, whereas some wouldn't be surprised to see Eurozone cut more negative or add to stimulus. And the reason the central bank will not be doing any more stimulation of the economy is because there's fiscal stimulus from the government to boost growth in the economy. It's a big package. It'll boost growth in Japan, okay, which is bullish, obviously, the yen. Capital flows are going back to Japan from Eurozone. I think it's worth keeping in mind just how big Japanese investments are overseas. They're the biggest overseas investors. They have $500 trillion in investments outside of Japan, and much of it is in Eurozone bonds and equities. Held 25% of the French bond market alone. That money is now going back to Japan, okay? And those outflows from Eurozone back to Japan will accelerate, which will keep the yen supported. And they'll really accelerate if we get risk off. That's just so bullish for the yen. It's the number one safe haven. So very bullish of the yen in terms of where we've been playing this trade. We got up towards the 123 level. We just sold off the level thinking it wouldn't get taken out. It didn't, obviously. Cracked the 20-day down, back up, try and test it, can't do it, down, okay? Now, in terms of this pair, a little bit oversold in the short term. Where could we rally to? Well, the obvious level is 120. We'll just get rid of that line, which is a round number, obviously. If I draw a trajectory down, just behind that round number, you've got the 20-day moving average. So I think there would be a good second level resistance. So basically, that little bit of a gap there, punched up there, then the big red comes through, two tails trying to get back up to it. So your stop could be 121.80. Do you want to sell a rally or get in straight away? If you're coming in fresh, my own view is obviously a rally to 120 and just sell off that level. Or we're just below the next round number, just through it by 14 pips, 118.86. If we open lower through 118.65, get clear of the 119 round number, come in with a trade. So again, a bit like Euro USD, if you want to get in, I'm always in favour of just get in and then keep a trade in reserve to sell the bounce. And we could just see a big acceleration to the downside. We don't know what's going to happen yet, but I'd be in favour of having one in, and also one in reserve for a bounce. Where are we going to go to? Well, we've seen on the weekly chart 110, you do obviously have a level on the daily chart, which is that double bottom where we had that nice push off. But I think we should get down here, and I think we should break that level, which is very bearish of the euro. So both trades are going well for us. And I think, a lot of people think, oh, have I missed the trade or the trend? No, I think this is just the start of really big downtrend in the euro against both the USD and the JPY. Will obviously update these pairs in future videos. But just one thing before I finish. In terms of stops, just do not put them too close. Use the 20-day moving average and round numbers, and always have at least one round number in between your position and your stop. It varies from pair to pair, of course, but you get the general gist of what I'm saying by watching this video. Right, thank you very much for watching me as usual. Take care. Have a good day.